The Trade is brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.
Hello and welcome to The Trade. Before we get into the charts that matter, let's just recap that the Fed has held interest rates steady while signalling 2 more rate cuts this year.
Despite elevated uncertainty, the economy is in a solid position. The unemployment rate remains low, and the labor market is at or near maximum employment. Inflation has come down a great deal, but has been running somewhat above our 2% longer run objective.
And given the imposition of tariffs, Fed Chair Jay Powell said that a cost shock is coming, with producers, manufacturers and retailers all absorbing higher prices.
If you look at the forecast, you will see that people do generally expect inflation to move up and then to come back down. But we can't just assume that. Of course, we don't know that. And, our job is to make sure, one of our jobs is to make sure that a one-time increase in inflation doesn't turn into an inflation problem.
All right, we are also, of course, awaiting the key jobs data locally. But my next guest says silver's breakout is looking fantastic. Let's get across the technicals with Zoran from Blueberry Markets, who joins me now. This has been a theme that keeps coming on, Zoran, in terms of the fact that we shouldn't overlook silver, the rise that we're seeing in silver, and the momentum that we're seeing it lift some of the silver players as well.
That's right, Julia. It looks like diversifying the portfolio is essentially what majority of, traders or investors are actually looking at right now. And, you can't actually look too much further away. Gold is actually, gained so much momentum over the past few months and also probably a year and a half or so. And it looks like the real value is starting to pull investors to rebalance and look getting into silver. So silver has been actually nominal terms much cheaper than gold. And I think over the last week or so, what we're seeing is an interesting comparison where gold has come off approximately 2.5% since all the geopolitical tensions that are going on in Middle East since Thursday, last Thursday. And in fact, actually, we're seeing silver appreciate for approximately the same percentage amount. To me, that demonstrates only one thing, that traders and investors are actually looking for the next best thing, and it looks like actually silver is one of those assets that could be performing amongst many other metals at the moment. So I'm looking at a key support level around $34. I think that's a really good base, especially over the last major range from the lows of 2870 and the Fibonacci retracement from the most recent low back in April 2025 to the most recent high. But overall trend is up. Silver is looking really positive. We might get a bit of a breather, but I would actually anticipate that this will continue to actually head higher and potentially go towards that $35 to $37 range.
What about oil, Zoran? Because I had another guest earlier in the week saying, look, it's really just one Israeli or Iranian decision away from whether you see $80 or $70 a barrel.
I'm a little bit surprised with the move overnight, because we've actually seen oil come off quite a bit, Julia. But nevertheless, I've taken a slightly longer approach on this chart. And in fact, what I've done is looking at the greater picture just to give me a bit of a momentum and clear view on what's unfolding and whether this trend is actually about to break. Looking at the highs back in 2022, when oil was as high as $129 or nearly $130, that downtrend line has been actually pivoting and hugging the trend for quite a long time. And at one point, obviously, over the past few months, when oil broke below the 66.80, I was actually pretty confident that the downtrend will actually continue. But then, obviously, we've had the geopolitical risks and all the tensions that are going on in the Middle East, which is obviously adding another layer of supply-demand challenges right now. Looking at the last major range on crude oil, oil, I can see a breakout above that downtrend line. We can see a level of around 73.13, which has been broken. The price is actually gone as high as $77.72, and it looks like we actually might get more buyers and confidence coming in into oil over the next few days. I think the breaking news from this morning is that it appears the US might be actually getting involved in the Middle East, which should add another layer of complexity into the market and potentially some disruption in the oil supply. And as a result of that, I would actually expect for crude oil to continue head higher. The level that I'd be looking at on the chart would be probably around $80 right now, and that's probably an upper band. Contrary to that, any de-escalation of the Middle East tensions and any potential pullback, I would expect actually for the price to hover around $66 to $67. I think that's a really, really good base and level of support. It's provided that on numerous occasions over the past few years, and it could be a level where we could actually see crude oil stagnate, or at least for now in the short term.
All right, Zoran, let's discuss as well what we're seeing in currencies, and particularly the euro. We do have the Swiss National Bank interest rate decision tonight. We had the Fed overnight, of course, signalling borrowing costs are still likely to fall this year.
I mean, just talking about Fed in particular, in last night's commentary, what I found interesting is that, somewhat rhetoric has actually changed from Jerome Powell. I think, the markets actually got caught on the wrong footing, to be honest. We've seen equity markets actually get sold off in the US overnight, and equity markets locally are actually getting sold off today. So, as a result of that, dollar is gaining a lot of strength. I think the commentary around, interest rate cuts and hawkish bets in terms of the US dollar actually continuing to prevail. We're seeing that actually quite evidently on the chart as well, as euro has actually somewhat sold off over the past couple of days, 1.53% to be precise, from the most recent highs last week at $1.16. So I think the good base and support on euro would be around 112 right now. I think that's actually our short-term indicament. It's all consolidating nicely and coinciding with the Fibonacci range of around 23.8 to 38.2 level, as well as the natural level of support, which provided resistance on previous few occasions back in 2023 and 2024. So, euro is obviously taking a bit of a breather. Dollar is gaining quite a bit of strength on the back of obviously, Fed speech. But I'm starting to think and actually be in the camp that we are likely to probably have reflation or stagflation, or, continue to actually head higher. I don't think we've actually priced in all the tariffs and challenges that are actually, happening across the globe with regards to supply disruptions at the moment. And, the market is actually pricing an 80% chance we'll get an interest rate in the month of September, following through by another one in October. If we do get that prolonged, and I know we do have interest rates prolonged and actually deferred in 2026 and 27, then it's likely the US dollar is going to continue to actually gain a little bit more momentum and strength, which could provide pathway for euro to actually consolidate and head a little bit lower.
All right, Zoran, always appreciate your insights. Thanks so much, Zoran Kresovich from Blueberry Markets. That does it for this edition of The Trade. Be sure to join us next time.
The Trade was brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.